When do you see Bitcoin breaking that correlation and becoming something other than a risk asset, a true store of value?
It's this cycle. So there's two main reasons.
What's up, everybody? Welcome to another Saturday edition of the Alpha Series here on Discover Crypto. We've got a great guest lined up. We're going to be talking with Joshua Jake. How you doing? How you feeling?
I'm doing great. Got off the plane coming to Atlanta just a few days back. Got on the plane at like $28,000 Bitcoin. Maybe it was at 30K, but by the time I was off, 35K, market's going wild, people going, where's this money coming from? Is this retailers? Is this institutions? Is this BlackRock's fault? Is this not BlackRock's fault? And it's just an exciting time to be in the markets for the first time in like 3 years. So I'm excited to be here.
I mean, I can echo that. A lot of people have come in this last, we had a huge amount of adoption over the last 2 years, and it kind of dwindled off. Engagement dwindled off. We see that as creators on YouTube and TikTok and Instagram where we get all those metrics. So Is there any sort of thought you have right now that you'd like to share with anybody, whether they're new in the market or they've been around for a long time? What's something that we need to consider with this new hype coming in? We got that God candle. Is there anything that we should be worried about? Is there any different sort of risk management we need to be doing? How do we not fall victim to these green candles and get ourselves in the wrong side of the position?
Yeah, great question. I would say, honestly, the first thing is realizing that we've been lied to nonstop from our financial institutions, our asset managers, just year after year after year. How many times has crypto been, had an obituary? It's been like 1,000 times at this point. There was actually just a recent article that showed CNBC and Bloomberg. So shout out to those analysts that have predicted the death of Bitcoin over I think 25 times and 35 for the other. So, moving into this new cycle, as we see hype come back and this life come back into these markets, it's the same vibes of early 2020 before we saw that rally into 2021. Don't chase the green candlesticks, right? Venture capitalists, asset managers, banks, they don't chase green candlesticks, right? They're buying and accumulating year after year when we're in a bear market. So if you're brand new to this industry, you just see a big green candlestick and you're like, man, I should buy before it goes up further. Just take a breath, sit back and just, let it find support. Just give it a moment and truly just understand what the asset you are buying actually is, how it functions, what the utility is before you make that investment decision.
I couldn't agree with that anymore. We talk about other people like Michael Saylor. He's become I don't want to call him the mascot or the spokesman of the Bitcoin space, but he is case in point, just taking it to the shoulder, taking it to the face, taking it to the back when he's just been DCAing nonstop. Some people call him dumb in some areas where he's buying near a top, but then you see he's also buying near a bottom. It's that time-tested strategy of buying because he sees value long-term. So how does one gain confidence when they're seeing the market swing about and to have that confidence to be a consistent buyer? But we were talking earlier, you mentioned that one of your main strategies, barring any other trading, your main strategy is DCA. So how does somebody, whether they're trading right now, they just got in, or they've been around for a long time, why should somebody DCA? Why do you use that as a strategy, and how can we implement that in all of our own portfolios to have more consistency and longevity in this market?
Yeah, so there's two main reasons. The first one is just time in the market always beats time in the market. I think that's a historical model. A lot of people that have tracked the S&P and just traditionally traded, they follow that metric, right? You don't want to be trying to time the bottom, time the top, just consistently average in. The second point of that is going to be just watch your local news media right now. Watch CNBC, watch Fox News, watch CNN. And not in the sense that you're going to take and absorb information from there, but realize that every economist in the world right now that has the PhDs, has the master's degrees, has 14 books, has a $100 million hedge fund or a $100 billion hedge fund, they're all fighting. They cannot compromise. They cannot come to agreement, right? Whether it's the war in the Middle East or it's the war in Ukraine or it's developments in the Pacific, people don't understand and can't figure out where we're heading in the future because we just printed $9 trillion in the last 3 years. So this is the first time I think you've seen a lot of economists not say, hey, take a pause back, let's focus on risk off assets or let's focus on risk on assets. It's more or less, man, when is the Fed's going to pivot? Are they going to pivot too quickly? Is this going to break the wage versus wealth gap in America? Are we screwed? As a 26-year-old, am I ever going to be able to buy a home again in my life, right? These are those questions that are starting to ramp up. So off that second topic, how do I position myself? I don't care necessarily what someone that's 70 or 80 plus years old is wondering about what's going on in the markets. You just brought up Michael Saylor. He's either going to be the next generation Warren Buffett because he makes the best trade in his life off Bitcoin, or he's going to fail miserably. Now, I like to lean towards the positive side of that because I am very bullish on Bitcoin, but that's my outlook. You know, when I see all these economists and these people that have been managing these hedge funds and asset management firms for 2, 3, 4 decades at now, you know, when they tell me that I'm wrong, that crypto is a bad investment, and I see the adoption on the back end, all I go is show them the chart of the wage versus prosperity gap in America. Go to 1971, what WTF, I won't say the word, but WTF happened in 1971.com, and you're gonna look at the wage versus prosperity gap. Our politicians, our lobbyists, our economists, they've been wrong for 50 years. This inflation's not stopping, and it's not going to stop. So how I hedge myself is I follow something pretty similar to the 50-25-25 rule. What that rule is 50% of, you know, what I'm, this is my personal opinion, not FA, we know the rules here, is ultimately gonna be into those large caps, Bitcoin, ETH, some people like Matic, some people like XRP, whatever your blue chips are. Personally, that's Bitcoin and ETH. The next 25% is going to be your large caps, mid caps. You know, you want to diversify, and that last 25% is going to be the VC strategy, right? You need to think like a venture capitalist coming into this space. This is the jungle. This is Wall Street 2.0. This is no different than Silicon Valley. This is no different than the dot-com bubble. There's VCs coming in here like sharks, wrapping software as a services in a product or a utility token, and then just pumping and dumping a same project that's a copy and paste of the previous. And so for that reason, I treat it like just VCs. I want to diversify and invest into quite a few, understanding that yes, 6 to 7 of them are going to go to zero, 3 to 4 of them are going to break even, and 1 is going to hit that moon back.
So I'm going to pause you there just for a moment, just to clarify, 50% Bitcoin and Ethereum, or Bitcoin or Ethereum, another 25%, those other blue chips, we're talking, you know, something probably in the top 20, I would guess, right?
Yeah, top 20,
and then
top 30. Yeah.
The last 25%, you said VC, so it's a higher risk, the lower market cap most likely. Are you putting all of that 25% into one? Or are you breaking up it into 5, 10, 15? I suppose that might be determined on how large the capital pool is that you're pulling from.
Definitely breaking up. Yeah, you know, the moment you're taking more than even 5% of your overall 100%, right? So if we have 100% of that portfolio, you know, you shouldn't be allocating 25% of that to meme coins, right? Things that have no utility or products that have no fundamental value at all, like Hex, right? Yes, I'm going to take a shot right there. You know, you want to spray and pray on that because at the end of the day, it doesn't matter if necessarily these products have good utility or not. Look at Solana. It's broken down more than an ice cream machine from McDonald's. You've heard the memes, right? It's closed on Sundays like Chick-fil-A. So, you know, from that aspect, it's going to come to that marketing. And so you, like, again, no utility, but they're going to pump. So that's where you just want to diversify into, honestly, like 20, 30 cryptos. You know, we're talking about you're putting $100, $200 into a bunch of them, understanding, yes, it might go to zero, but also this might be the next Polygon Matic, or this might be the next Decentraland Mana, or whatever it is that we saw pump in 2021.
So you brought up a great point earlier, and I want to get your perspective on this. This is, I think, a very important consideration with Bitcoin, because Bitcoin, in a lot of ways, drives the crypto ecosystem. So what happens with this narrative, I have to ask you, with risk on, risk off. Currently, it's still considered a risk off sort of asset in terms of you're going to typically want to look to Bitcoin when risk comes back in the market, right? So because it's high risk. So is it risk on? Is it risk off? This debate about Bitcoin still being whether or not it's digital gold, it's going to, you know, be an inflation hedge. I think in the long term it will. But I have to ask, what's your perspective on when Bitcoin may flip out of that risk narrative, where it's truly a commodity, where it truly not only trades in its own sort of sector, but also counter to, for instance, right now we see the markets maybe on the cusp of breaking down, especially after the Fed pivots. Is Bitcoin ready to have a true and like a sustained and continual breaking of correlation with traditional assets? When do you see Bitcoin breaking that correlation and becoming something other than a risk asset, a true store of value?
It's this cycle. You know, you get a lot of talks of de-dollarization. There's lots of talks of BRICS, China, Russia, Brazil, India, South America, all coming together and, you know, building a system that's an alternative to our current currency in the United States. Now, for that reason, that's because of all the money printing we've been printing the last few years. And inevitably, we've been indebting third world countries, second world countries with World Bank loans. And what happens when the United States raises their interest rates and force us to not only print more money ourselves to pay back our own interest rates, because next year we're going to be paying back $1.25 trillion annually just in debts that we owe based off our own interest. It's ridiculous. But people don't realize the impact that has on third world countries and second world countries. These countries are indebted to the United States. They have US debts, US treasuries, right? So when they're holding on to these assets, it's going to force them to print more of their own money just to pay back off the US loans that they owe, right? So, it causes hyperinflation. It destabilizes a lot of countries. And for this reason, you're seeing a lot of second world countries, third world countries now come into play and starting to do things like in the Middle East, you had, I believe it's pronounced Oman. I could be pronouncing that Middle Eastern country wrong, but this is right on the border of Saudi Arabia. This is in that oil basin area. They're investing $1.1 billion into converting wasted natural gas and methane emissions into a net value with Bitcoin miners. What do I mean by that? Well, this is where the world's greatest commodity comes into play. You see, most of the energy that's created in our world through our fossil fuels. So let's get this out. Greta Thunberg was wrong. Okay. We need nuclear. We do need to go towards renewables, but we rely on fossil fuels. That's not going to go away. And the infrastructure that's been built out in the United States and globally, it would take us years, if not decades, to replace the equipment and infrastructure to support new energy. So with that understanding, we have all of this energy being created, and you have, and I'm sure you guys have seen it, but oil fields where they're just flaring gas emissions and burning off all these oil emissions into our atmosphere.
Pure waste.
Pure waste.
Why not harness it?
Exactly. And so we're now seeing companies like Crusoe Energy, Clean Spark, and a lot of companies come together through Exxon, ConocoPhillips, even Gazprom, which is going to be one of the largest oil providers in the world out of Russia. They're all converting a lot of that wasted energy into a net value with Bitcoin, and that can be done anywhere. So for that reason, I think this next cycle, this is the time where we have the spot ETFs. We watched BlackRock, JP Morgan, Bank of America, Wells Fargo, everybody manipulate our markets for the last 5 years. They're calling it a money laundering index. They're saying it's a scam. They're saying it's going to go to zero. Meanwhile, the whole time they're investing on the back end and getting ready to develop what I believe is going to be the next biggest financial product ever, which is a Bitcoin spot ETF.
Joshua, it's been great talking with you. Where can everybody find you? Give us your socials, and when are you going to come back?
Yeah, so it's Joshua Jake on all socials. I do a lot right now. I just actually sold my personal marketing company, but right now you can find me on TikTok, Twitter, and then of course YouTube. But YouTube, I'm actually transitioning, guys. It actually looks like I'll be here about every other week on Discover Crypto, hosting your guys' morning show and doing a lot more interviews and content like this with you guys here in Georgia. So stay tuned for some crazy announcements coming out of that. You can also find me on CRU Plus, which is going to be Cryptos RS's George's new program. I'm hosting a show called Beyond the Headlines, where I go in depth on your macroeconomics. I bag on certain presidential candidates, and I just talk about the real things that need to be talked about in these markets that do affect crypto. So.
Well, right on. We appreciate you being here, talking and going surface level and going super deep. I hope you all enjoyed that. Make sure you hit the like button, hit the subscribe button, ding the bell, join us here in our community. Positive encouragement, data-driven, trying to bring you the best, the peak and information here in the crypto markets and looking at those broader markets too. I hope you all have a wonderful Saturday. Thank you for being here with us. That's all I got. Adios, muchachos.
Thanks, guys.